Alright guys, I'm starting triple candlestick pattern today. We have completed single and dual candlestick pattern and I'm going to talk about evening star and morning star at the beginning of this triple candle pattern. So here we go. We call it triple candle pattern and today I'm going to talk about evening star and morning star. Alright. This is USD CAD daily time frame, and I have identified a few morning and evening stars, or you can say a few lookalike morning and evening stars. So here we go. On this chart, look at the left side, just below the triple. Let's look at this one. Market was in uptrend. Then what we have here, bearish reversal, but market didn't start going down immediately. Market was kind of consolidating between this range for many days, 1 2 3 4 5 6 7 8 trading days. So there are two candle patterns which we have to look at. If we have to look at these three candlestick pattern, this one, this one, and this one, we must find a closing below the mid of the this candle. So there has to be three candles. The mid candle should be very small in the size, which must show some indecision in the market. And third candle should be the reversal candle, which must close beyond the midpoint of the first candle. So since this was an uptrend, this was a bullish candle, this is the midpoint of the bullish candle. So this candle should have been closed beyond it to make it an look-alike evening star, but it didn't close beyond it, which is why it was not an evening star. So any trader wouldn't take a position right here. However, next day market started going up because it couldn't make an evening star. So you can see next day market went till this point and then closed as the bearish candle. So this is where we can say that the okay, finally bears are in the charge of the market. However, uh, we do not have any candle pattern. So if there are other factors on other time frames suggesting sell trade, a trader can take a sell position here and keep a stop loss above this high, or maybe wait for closing of the candle above this high in order to admit that the setup has failed. All right. So if we took the sell position here, what happened next day? Next day was totally different. Next day market made a small candle, which again shows that the market is in indecision. So if we look at this one, here we go. Let me, all right. Next, this was a tiny bullish candle with this body. So here the shadow of the candle doesn't matter. So if this body will become negligible, we can call it dozy. Otherwise, it may be it's looking like an inverted hammer. If you remember the inverted hammer, so it made an inverted hammer, which immediately says that the market again may go to the upside. And yes, market did go to the upside. However, your trade SL wasn't hit because you opened a sell position here. Here was your SL, and then you waited for further price action. This is how a trader generally behaves if he sees the candle patterns. Next day again, we have a small candle with tiny body. You remember this is a spinning top. Again, it shows the indecision in the market. And then what happened? This candle was formed, which closed here. So we still can consider this whole movement as a consolidation or as a sideways movement after the exhaustion of this uptrend. So uptrend is exhausting, market is going sideways, and it's making a lot of patterns in this range. But once this candle was formed, this closed beyond the midpoint of this. So we can call these three candles a evening star. And this is a powerful evening star because the third candle didn't just close beyond the midpoint, it closed almost below the low. So this is an evening star, and that is why you can see a fast bearish action the very next day. So these are this is how we look at the evening star and morning star, and this is how they are traded. All right, let's look at other candle. So here it was a powerful evening star, and if I look at other candles, I'll show you if I find any other evening star or morning star. Okay, so here we have a morning star. Market was in downtrend, then it made a bullish engulfing, closed above the high of this candle. So let's say you took a buy position here. Of course, your stop loss will be below this candle, and your target will be something equal. So if this was the size of your stop loss, your TP has to be either here or above this. Then what happened next? The market was making some sort of spinning tops, then candle with upper shadow, and it didn't go to the upside immediately. Generally, what happens in USD CAD, what we now see is that the market doesn't immediately change the direction. It uh, it shows sideways movement after the end of the trend, and this is how it shows that the whatever trend was already prevailing in the market has adjusted now, and market may return. So I'll give you an added idea how to trade candle patterns along with the split entry. So let's say you plan to enter with a certain risk, let's say uh, 0.1 lot on a tiny account of $1,000. Then rather than entering zero point 0.1 right here, you can enter 0.3, 0.03. Then you can wait for further opportunity because you have seen that the market doesn't immediately return to opposite direction. So market may consolidate. Consolidate means market may do this kind of sideways action, and then market can further move to either side. So we here get this morning star. Market goes to the sideways, then again bearish action, tiny bullish candle which is a spinning top. So what we need from the second candle is indecision market behavior, whether it is spinning top, any tiny candle, it can be a doji, it can be a candle without any uh, shadow, that also is one type of doji. So it has to be a small candle, then third candle should close beyond the midpoint. So if we look at this candle, this is the midpoint and it closed above the midpoint of this candle. So this now is a perfect morning star. So if I took one buy position here, I will add another buy position after completion of this candle right here. So I will get two buy position. This is how I have two buy position, and then market goes to the upside, and I get the TP. So this is a slightly conservative way of entering positions rather than taking all the risk at a time. Many of our traders use this split entry method, but this looks similar to other traders who are actually using the risky method. For example, many people may buy here anticipating that the market will go to the upside, and then market one buy here, then market falls, another buy, again falls, another buy, and they think that the market will return and that they will close all the trades at the midpoint. This is kind of risky strategy if you do not have a risk limit. This can also be managed if you have a certain risk limit. If you want to stop opening buy position and take the loss like 20%, 30%, 35%, whatever is your risk limit. So if you are ready with the proper risk limit, even this strategy can be used in your advantage, even though this is a risky one. But this is not actually how our traders are entering split position. This is how they enter split position. So I just gave you an example besides teaching you how to use morning and evening star. So that's all today in this triple candlestick pattern. Thank you for watching.